May we be upstanding for the national anthem.
Stand and sing, O Zambia, proud and free, land of wake and joy in unity, victors in the struggle for their right. We've won freedom's fight, all one, strong and free. Africa is our own motherland, fashioned with and blessed by God's good hand. Let us for her people join as one, brothers under the sun, all one, strong and free. One land and one nation is our cry. Dignity and peace needs Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, all one, strong and free. Praise be to God, praise be, bless our great nation, Zambia, Zambia. Free men we stand under the flag of our land, Zambia, praise to thee, all one, strong and free.
May we remain upstanding as I invite our manager, banking, back office operations, Mrs. Waza Nguni, to give us a prayer.
Shall we pray? Father, we are thankful for this is the day that you've made. And so, Lord, even as we begin the Monetary Policy Committee meeting, we're asking, Lord, that your grace and your presence will be with us. Thank you, Lord, for your guidance for the management of Bank of Zambia so far to prepare this report. We're asking in the name of Jesus that you just continue to guide them and lead them and give them wisdom to work according to your plans and your purposes. In Jesus' name, amen.
Amen. Thank you very much. We may be seated. The governor, deputy governors, members of the Monetary Policy Committee, members of the press, ladies and gentlemen, good morning. Welcome to our first Monetary Policy Committee media briefing for the year 2022. The Monetary Policy Committee held its meeting over a 2-day period from February 14 to the 15th, 2022, and this morning the governor will be announcing the decision of the committee. Allow me to acknowledge the presence of our online audience who are following this event through various channels. As always, we are live on ZNBC TV1, the Bank of Zambia Facebook page, as well as the ZNBC Facebook page. To those that are following us through these platforms, we value your presence. At this point, let me introduce the people up front here. We have the governor, who is accompanied by the 2 deputy governors. We have Deputy Governor in charge of operations, Dr. Francis Chipimo, on governor's right. And we have Deputy Governor in charge of administration, Mrs. Reka Mohango, on governor's left. Next to Mrs. Mohango, we have Director of Economics, Dr. Jonathan Chipili. And next to Dr. Chipimo, we have Director Bank Supervision, Mrs. Gladys Chiwele. Allow me also to acknowledge the members of the Monetary Policy Committee in the auditorium. My name is Besnat Mwanza. I will be your Director of Ceremony this morning. I will, at this point in time, call upon the Governor to address the media. Governor, sir.
Good morning. Let me join Bessie in welcoming you to this morning's media briefing on the decision of the Monetary Policy Committee. I believe this is our 30th Monetary Policy meeting that we have held, but the first for this year. Okay. This is an outline of the presentation that I'm going to share with you this morning. This time around, having seen last time that perhaps I overran the time, I'll try to be as quick as possible, particularly that you are quite familiar with some of the issues that we deal with as a central bank. So the outline is that I'll start out with the decision that the committee made yesterday, which started its meetings on Monday. Then I'll go into some underlying information which gave rise to the decision that we are sharing with you today. So starting that will be a short kind of presentation on global economic growth, followed by domestic economic activity and outlook for our own economy. Then really look at inflation outturn and the outlook over the next 80 quarters. We also share with you what is happening in the government securities market, which is a complement to the revenues that the government collects. And the bank, as you know, we serve as a fiscal agent to the government. Then you look at interest rates, both in domestic market and when I say domestic market, that is including the financial markets and the government securities market. Then look at how credit has fared over the period that we are reviewing, and look at money supply that went along with that credit. We quickly highlight some aspects of the fiscal policy and the implementation over the past quarter and the looking forward. Then we turn on to the current account, which is the external sector of our economy, to see how we are faring vis-a-vis the rest of the world. Then we share with you where we stand in terms of gross international reserves, both in level and the months of import cover. We will spend a bit of time looking at the foreign exchange market, which I think has been topical in the recent past, and provide a conclusion thereafter. The decision of the committee was to maintain the policy rate at 9%. I just want to repeat that. The committee decided to maintain or hold the policy rate at 9%. Now, how did we arrive at this decision? There are a number of factors we took into account, but chief among these was the sharp decline in inflation, which has been observed since our last meeting in November. And then we cast our eyes over the next 8 quarters, and we noted that inflation was trending towards the 6 to 8% target range that we are focusing on. But it was also important for us to look around inflation, what is going on in the wider economy. We see that growth has started to come up, but there are still some fragility to that growth. And we noted that the financial system is still not quite as robust as we would like it to be, but it is showing some resilience. So that, in a nutshell, were the key factors that underpinned the decision of maintaining the policy rate at 9%. Moving on to the global economy, we note that global economic recovery accelerated in the fourth quarter due to improved vaccinations in many of the developed economies. But I think here it's fair to say that towards the end of the year, arising from Omicron, there were some disturbances which had some brought in some breaks in terms of that projected growth. But for the fourth quarter as such, growth accelerated. So we see that these economies, including ours, to some extent benefited from business optimism and consumer confidence. And then they strengthened the global demand accompanied that. So trade was beginning to roll, but we see that in 2021, in terms of actual growth, that was 5.9%. If you recall, in 2020, the global economy recorded a recession, so did Boeing and many other countries. Now, since then, we have seen that economic growth is expected to slow down to 4% in 2022 and 3.8% in 2023 due to weaker prospects for growth in major economies, lingering supply disruptions. As I indicated, we had the Omicron challenge where travel movement was restricted. It's beginning to open up now, but obviously that already made a dent in terms of growth. We also see that there is still some concern that there could be some emergence of some new and highly transmissible COVID-19 strains or variants. So the chart on the right kind of puts that in pictures. What you see that the dip there in 2020, then a quick turnaround, but that is tapered now following these factors that I have highlighted. Now, on our domestics front, we see that GDP is estimated to have grown by 3.5% in the third quarter of 2021 against a contraction of 3% in the corresponding quarter in 2020. That means the third quarter of 2020, it was a decline. So you can very well appreciate that a growth of 3.5%, much as the number itself might appear low, but given where we are coming from, that's quite a good achievement. Let me just share the chart there, which depicts that. We see that these are quarterly numbers, so we see that when we aggregate all these for the 2021, we come out with a projected growth of 3.3%. Now, what were the major drivers of this growth that we have observed? Two sectors stood out. That's information, which is the field that you are in, and communication. Clearly, I see that the room is not full, but I shouldn't be deceived that what I'm seeing here before me is the complete set of audience who are following this. As Besnat indicated, there are quite a number of other people who are following this discussion, and that's all thanks to technology. So that particular sector, I think, has been doing well in the environment that we are in. We also refer to some work that we do ourselves here at the bank. which is the Bank of Zambia quarterly survey of business opinion and expectations. This also suggests some recovery in economic activity, driven mainly by increased consumer demand during the festive season and enhanced investor confidence. This we show in chart 3 here. If you look, this is what we call the spider. Now, the one to focus on is the one in the green, which is showing for Q4. It's the red, which is 2021 fourth quarter. So you see the red is kind of outside the other spiders in a number of areas. Capacity utilization, you see it's standing outside. Volume of sales is outside. Level of investment, and to some extent, new orders. But obviously, there are still some lingering challenges in other areas of economic activity. The other indicator we look at is the Stanbic Purchasing Managers Index, which also gives us a sense of the health of the economy, mainly for the private sector. So that one is calibrated in such a way that there is a line. If you're above the line, it shows that you are doing relatively okay. But if you are below, it means that there are challenges. There's a 50 mark line. So this is what we are showing here. You can see where we are coming from. If you look in 2019, coming into 2020, you can see it's all below the line. But then you look at the far right, you see that in October, November, and December, we are above the 50 line, which shows that there is some positive activity in the economy as measured by Stanbic Bank through this particular index. But you see that towards the very end, when we cross over the quarter, we have the January number there as well. So we see that in January, unfortunately, this came below the 50 line, the 50 mark line, but just by a tiny bit. But that is indicative of some of the challenges that had emerged during this particular month. Okay, so that I have covered, so let's move on. Then in terms of outlook, I already mentioned that for 2021, the figures have yet to be confirmed in terms of firming them up, but current estimates are that it's projected to be at 3.3%, as I indicated earlier on. Communication, wholesale and retail trader sectors. I think we are people of trading, which is one of the things I think going forward we need to re-examine as a country, that do we just trade? It's good if we trade in things that we produce, but if we are trading in things that are coming from others, we are at their beckoning. Whenever something goes wrong there, we are affected very much, and that's what attracts a lot of attention when the exchange rate moves. It's because of that aspect. In 2022 and 2023, we expect growth to rise to 3.5% and 3.6% respectively. This is what we are showing here in this chart. We stretch it, you can see that there are different groups which are doing this projection. So in here we are showing three. One is our own Ministry of Finance, which made this projection in November last year, and that is shown by the broken blue line. Then we have the IMF also made its own projection when we are discussing the ECF, which is the Extended Credit Facility. That was done in December. That's the broken red line. So you can see that they are very, very much aligned. Then we have this group of economists, which we call focus economists, which is a consensus view. That's the green broken line. And you can see that they are showing growth, but I think they are a bit more measured in how they project that growth to come about. Then this growth is positive, but I think it's important also to look at what could affect this growth in the downward direction. So this is what we look at when we say key downside risks, and we see that popping up quite prominently is the uncertainty surrounding the resurgence of new COVID-19 variants. Now, it's very important, and I think other political leaders, including the head of state, has made this appeal to people to get vaccinated. So we note that vaccinations are still quite low. For us, we are far from getting to herd immunity. I hope us who are in this room, we are all vaccinated, and some of you may even have had a booster. Please drag somebody along who may not have had their jab. We must get vaccinated. That gives us some good opportunity to partake in a number of activities. The other one, which is weighing on our projected growth, is the anticipated recovery in economies of major trading partner countries. They are also expecting to have lower kind of recovery. But here also one might want to say that currently we have, or in more recent past, we have had some challenges emanating from the weather that could also weigh down the growth projection that we have made is bent for our economy. Turning to inflation outturn and outlook, we note that in the fourth quarter of 2021, inflation declined by 4.9 percentage points to an average of 18.9%. That's quite a huge decline in one quarter. Now, this we see chart 6 here. This is what we are showing. The chart on the left is tracing the development in the inflation back to 2018, but the one on the right is just showing what has happened to inflation in the recent past, just to give you a clearer view of what we are talking about. You can see that the middle line, that's the overall inflation we are talking about. The last reading of that was in January at 15.1%. But in December, it was 16.4%. Before that, it was above 20%. So this is the decline that we are talking about, which also weighed on our decision to stay the course as it were. So you see the two main components of that, which is food, that's the green, and the red is the non-food inflation. So the shaded part there, that's what we are aiming for. So what we are saying is that you see even actual inflation is trending towards that range. And when we do the forecast, we see actually when we extend it for 8 quarters ahead, we see that it's going towards that that shaded part there that I'm referring to. Now, the major drivers for this outturn in inflation are the appreciation of the kwacha against the US dollar and the dissipation of base effects. I think last time I took time to demonstrate what base effects are, we are referring to. So as to that aspect, we see prices of meat and poultry products to be the ones which are leading the pack. Now, for the food inflation as a component, we see that this reduced to an average of 24.5% from 30.8%, and for non-food, it declined to 12.5% from 15.6%. In January, inflation reduced further, as I already explained. Now, here the drivers were mainly fruits and vegetables. That story again, I was saying that these are things we can do. If we really went into fruit production, vegetables, we should see this inflation stabilizing at a lower level. Now, there's this table here. It's just showing the same information, but in a tabular form. So just look at the last column there, which is the Q4 column that we're talking about. Now, that drop I was talking about, 4.9 percentage points, is if you compare Q3, 23.7, and the one we're talking about for 18.9. So that's what we are referring to there. The top part is referring to the average. The lower part are the end period. These are the ones which the Zamstats announces each month. So you must be familiar with those numbers. Okay, so let's move on. Now, in terms of outlook, as I indicated already, is that inflation is projected to continue trending towards the 6 to 8% target range over the forecast. Now, factors here which we picked include the catalytic benefits of securing an IMF program. Now, oftentimes people talk of access to the IMF focusing mainly on the actual disbursement that the IMF is likely to make once we reach a agreement on a program. And that's the famous $1.4 billion that we have been talking about. But there are other much more profound things that go along with that. Chief among these is that with the fund program in hand, we will have the opportunity to negotiate our debt, external debt, such that we get the relief that we so much need to enable us to move forward. So that's a big, quite benefit that it would arise from there. Then the other one is that there is what we call balance of payment support. Balance of payment support, unlike project support, is money which is given to the Treasury to decide on how it applies it. So it's a basket funding. So many providers of this kind of money will not provide it unless they are comfortable that we have a very solid macro framework so that they can feel assured that the money that they are providing will not go to waste or be used for the intended purposes. There is another aspect that we have observed, I'm sure you have in some of your conversations as journalists, that some of the investors who have been eyeing Zambia have been staying on the fence, saying that, no, we are not sure where you are going. You have also seen some of the, literally all the rating agencies rating us poorly, and that affects the cost of financing for our economy. So with the IMF program, all these now open up, and that would have very beneficial effects even on our inflation. So this is why we are stressing that the challenges we are having here, it's not a panacea, but it's a way in which we can begin to breathe, to move forward. Yes, there are aspects of this which people say, what about this? I think that's how government has stepped up the efforts on the social sector spending to help those who are not as fortunate to fend for themselves. So I spent a bit of time there just to put in that information out, to put out that information out. Now, in 2022, we see that inflation is projected to decline to an average of 13.2%. Remember, we are saying 18.9, this chart here, 18.9. Now, if this is for the whole year, where we're talking about 13.2, this was in November when we met, we were projecting that it would reduce by to 15%. So you can see that this is quite a sizable decline from the previous projection. And for 2023 is expected to reduce further to an average of 7.3%, which will put us in that band that I was talking about of 6 to 8%. So last time when we made that projection, we were staring at 9.3%. Now, like everything else in all these projections, there are certain things which are also happening and which we mustn't lose sight of, because if we do, then we'll be blindsided. And that's why I think the framework that we have, we came up with it, that we give you a sense of what the forward, the future looks. It may not be perfect, but it does give you an idea of what we are seeing, and we are sharing what you are seeing with you, with a view that as players, you'll be better prepared to handle those developments, so that you don't wake up one day and say, why didn't they tell that? I didn't know this was happening. Because if you are forewarned, that is being forearmed. So some of the key risks that we are seeing, which you are, I'm sure, already familiar with, include the increase in crude oil prices. I think the oil prices have been going up, and if they continue and that materializes, obviously it will have an effect on the inflation projection that we are sharing with you. Similarly, we have had these adverse weather conditions. The rains came a bit late. Then there are flash floods which have been happening. Infrastructure has been affected, and so on and so forth, the logistics. So that, if it materializes in terms of actually affecting the actual output that we get from this coming farming season, you see that having an effect on our inflation. The other aspect which we think is important to highlight is that the supply bottlenecks which COVID-19 pandemic has imposed on us are not over yet. They are still there. So to the extent that these continue and solidify, then they will affect the flow of goods and services. Now, we have observed already in major developing countries that inflation has been rising. Now, they are already positioning, some have in fact already taken actions to raise the equivalent of what we are doing here the policy rates. And in so doing, that has the potential to affect some of the flows that we are expecting that would come our way. Another channel that this shows itself through is the exchange rate. When the dollar, for example, strengthens, everybody wants to, well, many people, not everybody, many people, or those who would have otherwise come to our economies, they think it's better to put their money there. So that's the trade-off that tends to happen. The last item that we highlight is that I think the government has announced the cost-reflective tariffs. This is in two parts. There is the time when you actually implement this, but like any reform process, it has the ups and downs. Now, what we are saying here that when it is just done, it has that effect of raising prices. But as we move forward implementing that, there are these benefits which in effect is driving that change in the first place. I think if you allow me here just to demonstrate something here, if you buy a house which needs refurbishment, or even your own house, for you to get to the level that you want, you are going to break some walls, you are going to change the plumbing here and there. At that time when that is going on, that something actually is affecting you adversely, but you are looking to the completion of that project, that, you know, once this is completed, I will be in a better house which has a clean, free-flowing water, everything works. So this is the kind of reasoning I think we need to place behind these reforms that we are doing as a country, that when they are happening, there are these what appear to be adverse and undesirable things, but they are necessary to ensure that we get to a place that we want to be, what the Zambia we say we want to be. It won't happen by accident. It will only happen if we do. Sometimes that what appears to be too difficult, but the fact that we expect to get something out of should give us the impetus to move along with that. So we thought that we should clarify what really this means, and we hope that as journalists you be able to even do a better job of explaining what this entails. Government securities market, I did say that here I'll just quickly point out that in the period that we are reviewing, a subscription to government paper, that is treasury bills and bonds, remained quite high. We see that for the treasury bills, the bonds was 185.1%. So anything above 100% is sure that you are getting more than what you are asking for. Then for treasury bills, it was 120%. These figures, corresponding figures in the previous quarter were even higher, but the fact that they remain above 100% and significantly above 100%, it shows that the interest in government paper is still quite strong. And we have seen the effect of that was the lowering of yields. I'll show you in a minute what has happened to yields on government paper. And that's very important in terms of the impact that tends to have on other interest rates in the economy. Let me turn to this chart 7 is just to show you that because of the high demand that we have had, the stock of government paper has also gone up. So what you see, look at the last bar there, you see that we are now talking of 158.1 and 34.9. So in total, we have somewhere around 190 billion in the way of outstanding the government securities. So the bigger component is in bonds. That's the yellow part. The blue are treasury bills. Then what we are saying, the government bonds, I think that's why that chart is that big, is 81% of the outstanding stock. And we often also look here, what is the non-resident holding of this that we have? We see that rose to 28.8% outstanding from 25.9%. And 99.4% of that was in government bonds. Now, the importance of this we have highlighted in the past is that when you have non-resident players, that means they augment the demand domestically. Now, when we have these non-resident players, they come with them foreign exchange. So you note, for example, last year in August, there was quite a big appreciation of the exchange rate, arising in large measure to the inflows that we saw wanting to partake in these securities that we offer. But there is the downside also to this, that once they now gauge that, well, their interest is no longer being satisfied here, they are footloose. They will move to other places. So in that reversal, then demand for foreign exchange is also enhanced, and that's why, as I'll explain in a little bit, why you see that when that dries out, it has the opposite effect. So our expectation or our wish is that these would stay longer. That might, instead of short term, then you go to more long-term kind of investment activities. So I'll come back to that later when I talk of exchange rate there to just highlight that. Now, consistent with the increase in the policy rate last time we met, we see that the overnight interbank rate also rose, closing the quarter at 8.93% in December from 8.10 in the September. Okay, so this is the chart. All right, so chart 8, that's the one. So here again, you see the band there is the corridor that we would expect that green line to move about. The green line, that's the overnight rate we are talking about. So Isaac and team, Isaac is the director of financial markets seated in front here. They're the ones who monitor this on a daily basis. As we are talking here, they are looking at what is happening here and they ensure that this stays around that red line, which is the thing. Now, naturally, when you make the change, like we have done today, if we are making the change today, we have made the change, but the market takes time to make adjustments. So there are these lags, and then the job we do here is to nudge the market to move to the red line that we have. So now, even though it rose during the quarter that we are referring to, it stayed within the quarters as it is shown here. We didn't move outside that block. Now, because of that high demand that I referred to, we see that yield rates on government securities trended downwards for the fourth successive quarter, falling to 13% and 21.9% in December from the previous 15.6% and 23.9%. Now, this we show in this chart. Now, this chart brings out another very important development. If you look at the green line there, that's the average, the weighted average bond rate. You see that the last time it crossed the red line, which is the red line there, is the average lending rate, which you are more familiar with. Last time it crossed that, it was in the upward direction. That was way back in 2019. So this time around is crossing that line. I wish I could do the point. I can't point. Just look at the green line and the red line towards the end of the chart on the right. You see that it's crossing, meaning that the bond yields are now coming down. Previous time, when they were high, the banks tended to use that as a reference point for their lending. So the significance of these coming down is not trivial. This also is important in terms of the fiscal consolidation that we are talking about. If the government now, the fiscal stance is maintained, and if anything enhanced, then we'll see that the cost of money can also reduce in due course. So this is a very important point for you to note. So, yeah, I guess I said that already. Now, but when you look in January, we see that the weighted average yield rate on government bonds, it further reduced to 22.6%, while the weighted average yield on the treasury bills, on the other hand, increased. You see that kind of the blue line, that's what is showing, that little kink at the end there. That's the reversal we are talking about. It's still way below that. And we see now, you as players who want to buy government security, when you look at that, well, where do you want to put your money? Do you want to put in treasury bills or in bonds? That gives you an idea of where to place your money. And by the way, we are encouraging people to participate in that, and the participation is made easier and easier each time. Domestic credit. In December, growth in kwacha lending to the private moderated to 19.4% year on year from 35.9%. So the quantum still went up, but the rate at which that grew is what we are saying here, reduced. I think you can see that on the chart on the right. You see the red line, gross claims on central. This is on the part of the government. You can see how that the bars have reduced. The private sector is the blue. So that is not as we would want it to be. But there is a good reason for that happening in the time that we are talking about. You recall that the Bank of Zambia back in 2020 introduced this targeted medium-term refinancing facility. Well, it has been in operation, but we are more or less out of it now. So disbursements from that facility reduced because we are almost exhausting the allocated amount. So that translated in that decline in the private sector credit that we are referring to. Okay, but the government, on the other hand, it increased, but at a slower rate. But nonetheless, that is a decline. But it's important to say that, which may not be reflected in this. You note that we observed a growth in subscription rates on government paper. Some of the activities which was happening here shifted to the government securities, particularly the bonds. So these are some of the things that we have to manage going forward. Money supply. Now, as credit is going down, naturally you should expect money supply also to slow down. And it really significantly declined to 4.3% in December 2021 year on year from 11.2%. So it is something that we have to look at and maybe encourage banks to do more credit creation, lending to the private sector. Okay. There was another aspect apart from credit which was driving that, is the decline in international reserves, because to manage the debt service as well as manage the pressures in the foreign exchange market, the Bank of Zambia does from time to time make sales to the market to procure essential commodities, as it were, and make debt service. And so doing, it means that we are withdrawing liquidity from the market. So, fiscal policy, I think I touched on this, that preliminary estimates indicate that the fiscal deficit in 2021 was broadly in line with the target due to strong revenue performance despite expenditure exceeding the target. Now, we see that the total revenue and grants exceeded the target mainly on account of higher tax collection from the mines. There it will be mostly the foreign exchange that we are getting now directly from the mines. It was higher in the period we are referring to. But there is an exchange rate issue here also to be alive to. When the exchange rate is depreciating, the dollar amount may be the same, but in the kwacha terms, that goes up. So that aspect has to be borne in mind as we talk about. Going forward, we see that the ministry is quite geared to hold the deficit down or bring it down. So in 2022, we see that the target is to narrow it to 6.7%, further down to 6.3% in 2023 and 5.2% in 2024. To us, these are very important developments. If you recall from our previous conversations, we were concerned that the fiscal deficit was going in the opposite direction, and that was creating pressures in the domestic market on inflation. The financial stability was also affected. Now, there are some risks which we think we can highlight, but the ministry has done that already. This, for example, the emergence of strong variants of COVID-19, that the government will have to react to that, and in so doing, it means that there is a trade-off in the resources that have to be used. Then these adverse weather conditions that we are talking about, they have this unfortunate impact on crop production, the infrastructure, and the people's livelihoods. So though those require money to restore, and that could put pressure on the fiscal side. Okay. Now, going to the external sector, as I said, we see that the preliminary data indicate the current account surplus to have widened to $0.7 billion, which is 14.5% of GDP, from $0.3 billion or 5% of GDP. This came about because of the faster growth in exports than imports. So on the chart here, that is reflected by the gray shading on that. So you can see that the size of that bar is much larger in Q4 than it was in Q3. Then you see that the green one, that is the primary income, but the balance on services is that orange there, so it is small. So this is driven by more exports being made than the imports that we get. Now, there are some issues here which we are still clarifying in terms of the overall setting of the balance of payments. I think we will be coming to you in the future engagements on how we can improve the collection of information to see what is happening. Because with copper prices being as high as they are, and if production was also to follow suit, we should be actually getting a lot more foreign exchange inflows in our country, which should not be seeing us having pressures in the foreign exchange market. But there are some bottlenecks which need to be ironed out to ensure that we do have the full benefit from the fact that we own copper reserves. International reserves, I think this is a question we are asked most times, people say, where are the reserves at this point? Well, what we are showing is that there was a slight decline in the reserves from 2.9 billion last time we reported on this item to 2.8 billion. And in terms of months of import cover, that's 4.4 months of import cover versus 4.9 months of import cover. Now, the import cover can change even if you have the same level of reserves if the imports go up significantly. So that you must bear in mind. So, but we have to marry these two at all times, because the target that the minister gave us was that we must have no less than, I think, 3 months of import cover. But Zambia also belongs to other regional groupings. For example, in the SADC region, we agreed that as part of the convergence criteria, we should be reaching 6 months, and under COMESA is the same. So there are challenges here which we keep up to explain. Why is it that we are not able to meet that convergence criteria? But we give you this time around the full menu of how gross reserves have been performing since January 2020. This figure we report with a lag, obviously, so we are showing you that's for December 2021. Now, I mentioned about the foreign exchange market being affected, remember, by the government securities market. Here it is now. You see what happened. If you look, the top line there, that's the kwacha dollar. You see how it dropped, then went up. Now, what we are showing is that there was a significant appreciation in August, September last year. Now, a lot of liquidity came in, but that was just for a short while. It is soon stopped, but demand did not also decline. So demand, latent demand, continued being there. So this is how you see that it came down and then it rebounded, and it has been continuing to move upwards. So efforts are made to try and deal with this situation, but our message is that really when we have more production, exports, that's what will assure us a more stable currency. This living hand to mouth pressures will not stop. We should also do the diversification which we talk about. Okay, copper now is a much demanded commodity because of its use in electric cars and in renewable, in some of these electrical components. But it is subject to these fluctuations. We can hedge ourselves by broadening the base from which we earn foreign exchange. That will assure us a more stable currency. So as it is now, these fluctuations are informed by that mismatch between supply and demand. There is also another aspect, that is the sentiments. When people feel bad about Zambia, they withhold what they are supposed to do, that also affects our economy. So, but in the recent past, with the staff level agreement that was reached in December, and once we have concluded all that needs to be done to ensure that we have a program, we should see some inflows coming, like I indicated earlier, and that would help to stabilize the exchange rate. But we shouldn't stop at that. We should actually ramp up production for exports. I was lamenting to somebody the other time, I said, no, we need the foreign exchange because when these borders are open, they want to go and bring something. Please, when you go out, bring something to come and produce, not to go and buy a consumer item, because then your demand for foreign exchange will not stop. You will come for more and more and more. But if you are producing also to export, then you'll be contributing to the quantum of foreign exchange that we need. Okay. Foreign exchange market, I think this is a further depiction of what we are doing in terms of managing the pressure that was there. We had a net sale of 146 million. That's what led to the reserves coming down, as you showed in the previous chart. Okay. This we have shared before is the sources and the uses of foreign exchange. On the left side, that's the uses. On the right side, that's the supply. Just see how unbalanced that chart is. We are the longest, the red line, that is Q4 2021. The blue one, that's Q3 2021. So look at the portfolio side, which is the foreign thing. See how it was so big in Q3 and almost nothing in Q4. But demand, look on the left-hand side. It never really declined that much. Okay. Conclusion. Just to reiterate, the MPC decided to maintain the monetary policy rate at 9%. In arriving at this decision, the committee took into account the sharp decline in inflation since the November 2021 MPC meeting, and the forecast that shows a continued deceleration in inflation towards the 6 to 8% target range. However, there are upside risks which I have highlighted that could raise inflation above what we projected. So the issue is that now that we are aware of those risks, is really to take mitigation measures that they don't materialize, at least those which are within our control. The committee also noted and welcomed the government's medium-term budget plan, which is the white paper. We hope you have seen it. The importance of successful implementation of this plan to the achievement of macroeconomic stability, including low inflation and stable financial system, can hardly be overemphasized. So implementation is one of our key mantra going forward. Thank you very much. God bless.
Thank you very much, Governor. So there you have it, the monetary policy rate maintained at 9.9%. And the committee took into account the sharp decline in inflation since the last MPC meeting. They also considered the forecast that shows a continued deceleration in inflation towards the 6 to 8% target range. At this point, we are going to go straight into the Q&A session. So as always, we'll take 3 questions at a time. Those who have questions will have to walk through to the microphone that has been set up for this session. You will state your name, the institution you represent, and then you can proceed to ask your questions. Who will be first? Yes, please, you can walk through to the microphone.
Good morning. Ivy Monsa from Zambian Business Times newspaper. I'd like to find out how much gold reserves the bank currently has and how much gold the bank intends to purchase in 2022.
Thank you, Ivy. Next.
Good afternoon. My name is Cecilia Chilwa from Money FM. I would like to find out if the bank is considering stockpiling other minerals apart from gold in order to boost forex reserves. And also, how is the level of participation in government securities among ordinary members of the public? Is there any form of education that is being done on the importance of investing in treasury bills and bonds? Thank you.
Thank you, Cecilia. Anyone else? Governor, you may proceed to respond to those questions.
That's the beauty of having people who run things near you. I will deflate this question to DGO, whom the first question raised by Ivan on gold reserves and the plans for purchase. If DGO can also deflate it to Isaac, who may be.
Thank you, Governor. Good morning or afternoon, is it, everybody? On the gold reserves, Ivy, we purchased, our reserves are now around $48 million. And that was more or less what we purchased last year. We plan on making a similar purchase this year. And we're basically purchasing now, as you know, from one major mining company. We had been purchasing gold from also ZCCMIH, the Zambia Gold Company, but that is currently on suspension until the issues with that mine are resolved. So that's more or less, we hope to replicate what we purchased last year, this year. I think in terms of the minerals as well, it's sort of related. I think the key thing, as you know, gold was purchased to help us build international reserves. So the focus, or if I can put it this way, the qualification for what we purchase is obviously going to be on what can count as international reserves. And gold is one of those things which is traditionally known, it is well traded, it has a deep market. So for now, that's really what we're focusing on. There are other precious minerals which exist, but typically in terms of counting as international reserves, gold is what we traditionally use in the market, and that's what we are building. And then maybe there was on government securities, I guess it's related. Of course, we have been promoting investment in government securities. I think even in the last report, we did indicate that there's been a very big increase in the retail participation in government securities. Sometimes you won't see it in the graphs because the quantum is still relatively small. Of course, that market is still dominated by the commercial banks and the pension houses. But the number of people who are participating is increasing. That is happening because we have been carrying out quite aggressive marketing to try and encourage people to invest in government securities. Our team, led by Isaac, do go out. When we have trade fairs or in other areas, we do go out to sensitize people right throughout the country. But beyond that, we're also trying to look to see how we can make it easier for people to invest in government securities online. And so we're trying to build, hopefully, a portal where we can register people and they can actually participate in government securities online. I think technology, Governor made reference to that. It's an important part of so many things we're doing. This is an area where we think technology can also help us in improving the ability of people to probably get a better savings rate for their savings through investing in government securities. Thank you.
No, thank you so much. The other thing I can just add is that I think it's in other places, people, it's a source of pride to buy government paper, because it's like you are really claiming a share of what is going on. When you hold, well, now we don't hold the paper, but you have that number number or location, which is places you as the owner of that holding or share. So I think in other countries, as I said, the people have a pride in investing in their own government operations. So we are encouraging the ministry also to do that, there should come a day when you'll be very proudly saying that, no, I have a piece of what is going on in the economy. So that's what we are trying to promote, and one day we should get to that point where you say, I hold something. Just for those who don't know, I mean, treasury bills, you get your interest, it's a discount, but there is also non-competitive, and we raised the threshold very significant, almost 500,000, 499,000 kwacha you can participate in non-auction. The same goes for bonds. Now the bonds is, people like that because you get coupon payment twice a year, every 6 months, while you are waiting for it to mature. And that really comes in handy for people to plan their activities. So if you have not thought of it very seriously, maybe it's time when you have that bit of money to think of doing that. It's made easier now. You can do it directly with the bank, with the Bank of Zambia, without having to go through the commercial bank. So Isaac and team are all ready to save you if you need to. I think those were the questions.
Can we take the last round if there are any further questions?
Good afternoon, Governor and the panel. I'm Joseph Tamaribanda from QTV and QFM Radio. I just wanted to find out how the performance has been of the economy from the last update that you gave last year in November. Has the economy realigned to the monetary policy rate that was set last month, and how has it performed so far as we are coming to this one that has been maintained?
Okay.
Thank you, Joseph. I take it that was the last one. Thank you. Governor, you may proceed.
Thank you so very much, Joseph. I think as I tried to show, the economy grew and is projected to grow by 3.3%. That's positive from where we're coming from. It's a decent performance. But obviously, as a country, we need a lot higher growth than this, because I don't know, our population growth rate is relatively high. So we need to have a bigger gap between the population growth rate and the growth of the economy. So it is positive, but as I said, is not as robust as we would like it to be. I did point out also in the presentation that part of the reasoning to stay the rate where it is was to give chance to some of the measures that have been taken by the government, ourselves, to take effect. So from Q3, I think there was a chart there which shows how the economy grew on a quarter-by-quarter basis. So it was positive, but our action alone here is not enough to get the economy moving. We need others to come in and do their part. Remember, we are not producers. The producers are out there. who contribute. Yes, we are providing services which are counted into that. You are providing a service and that. But really to have robust growth, we need to go into areas which produce tangible products. And then employment also will be created so that we get people out of the streets, get them into productive employment. So there's a long way to go. Quarter to quarter, I think, is not sufficient to gauge how monetary policy on its own has done that. We need other players to come on board. And that's why I think we are very happy to see that there is this medium-term budget paper which the government has produced with clear targets. So we have to work towards that. And they are also working on a plan to replace the 7th National Plan, Development Plan. So all those are efforts to push our economy up in terms of growth.
Governor, the question is coming from Mr. Muyumba Mutwale. He's saying the banking sector has consistently used the past 3 expansionary monetary policy rates of 2009 to 2013, 2007 to 2019, and 2020 to 2021 to rapidly increase their government securities holdings while being slowly increasing their loan books. At this point, only banks and government benefit from a lower MPC, while the people suffer from inflationary effects of excess liquidity. What is the Bank of Zambia doing to reform the banking industry to improve the private sector and citizens' benefit of the expansionary monetary policy and not just individuals and small businesses? That's the question, Governor.
That's the question. Okay. It may not be monetary policy related, but it's a part of the financial stability. You may be hitting on to something right here that one of the reasons why we are focused on reducing inflation is really to make it possible for the lending rates to come down so that you can participate. For sure, there is some element of risk aversion in our market, which we should not shy away from talking. But that, to some extent, is also informed by the conditions in the economy. I think what has been happening in the recent past, you recall that there was the issues of arrears to the financial sector. That also really reinforced the risk aversion that some of the institutions had. But this is a process. We are engaging also with the individuals through a number of programs like these redress programs, financial inclusion. All those are aimed at getting people to be more aware of what they need to do and also approach these institutions with a view to getting resources. Remember, these are private entities. We are not in a position to kind of say, you lend it to that one. No, we develop policies. For example, one of the policies which we pushed through with other stakeholders, PACRA, is really the use of these movable assets so that we increase the menu of collateral that are admissible by financial institutions. But we see that the uptake of this is quite low as well. So we are reviewing that, to your point, that we want to understand what is going on. But clearly, with the COVID coming in, that also reinforced the challenges that we are seeing in the economy, because people say, well, what business are you going to do if supply chains are restricted? So this is something not just for the Bank of Zambia alone, but also for others. The government has a program of the National Education Strategy, which is being rolled out, and the idea is really to engage stakeholders, including the banks, to see that more activity can happen in our economy. And this is why we are saying that the constraints that we are having on our economy, the cloud that has been hanging on us, because everybody now, when they, in the financial sectors, who refer to Zambia saying you are the first country to default under under COVID conditions, that is discouraging players to come into our market. So that's why we need to deal with this matter so that we open our economy to more people participate. So competition is extremely important, but the extent to which that is happening in our economy is quite limited. But that also requires an educated populace which can take on some of these initiatives and approach them. And if we are having problems, then we know. And the government, there are channels. You see, we have the government now established the Ministry of SME. That is an effort to push that. But we need the stakeholders, the key stakeholders, to meet and determine the future of our country. So it's not an easy issue or that us alone can deal with, but we are doing our part and we call on other stakeholders to do that. Sadly, we don't have the trade fairs. That's why we encourage people to approach these institutions when they are displaying in these areas to say what is going on. Frida, when do we have the Financial Literacy Week? Next month? Yes. So next month we have the Financial Literacy Week where banks also participate. So we hope some of these conversations can take place there. We do it across the whole country in all the 10 provinces. So these are efforts to try and get stakeholders to talk to each other and see what needs to be done. But there's no one single action that will make that happen. The government, I think even us, we are working on a credit guarantee scheme. All those are efforts to try and reduce some of these perceived risks that is there in our economy. Because people at the moment, they just see you looking, before they even talk to you, they start already assessing you that you are not good for credit. That shouldn't be the case.
Thank you, Governor. In the interest of time, I'll just read two more. There are quite a number that have now come through online, but we'll see how we can deal with those. The first one says, update us on measures you intend to implement to curb the Kwacha instability. The second one is saying, is Bank of Zambia taking a wait-and-see data-driven approach to the MPC, or is there consideration of anticipated factors? In short, is the central bank waiting for risks to materialize before taking policy action?
I'm not sure I understand when you say, okay, that's measures to curb forex. Because I thought I explained can we maybe him explaining from a different, it might help.
Thank you very much, Governor, and thanks for the questions. The Kwacha and then how we actually conduct monetary policy are obviously two very important questions. I think on the Kwacha, the Governor did go through both on the demand side, on the supply side, if we like, the key sources we've seen, the mining, foreign investors, what has driven those sorts of flows, whether it's copper prices, production. For the foreign investor side, the issues around the sentiments and people's expectations of what was likely to happen in the economy. On the demand side, again, the chart he showed, we are seeing some of the big areas. We know the public sector with oil and so on, which are continuously driving demand. But the point the Governor made was which I thought was clear, was that, the way we need to deal with it so that we avoid us constantly responding to shocks. In other words, very good copper prices, things are good, when they go down, they're bad, is to focus on production and diversifying the products that we export. From the central bank's point of view, from a practical side, I think there was also a chart which he showed towards the end, which shows that we try to provide support to the market when there are significant periods of stress. So we have got sort of two broad objectives. We try to build up reserves so that people over time will have confidence that we can meet challenges which come, but also that when the market doesn't have enough liquidity in terms of foreign exchange, we can sell, and that helps attenuate some of the challenges which are there. But you can't get away from the fundamental point that over time, let's increase our exports, whether it's mining and other minerals, but more importantly, let's diversify the kind of things which we can export. And I think the approach of the government now, and I think this is why there was a reference to the medium-term framework as well, because that has policies. I think that has been well articulated now in terms of the focus on trade, investment, and trying to build Zambian businesses to benefit from that. So that's really the case. It's not going to change much, however time we ask it. It's a difficult thing to do, but it's a fundamental thing we have to do. You just have to diversify exports and really focus on that. I think in terms of the data, again, this is also an important point, but the way I would answer it is simply to say that we present a forecast which is really asking us simple questions. Where is inflation now? Where is it likely to go? What are the things which might impact it? And we come to a position. After looking at all of the data and all the technical work which the teams do under Dr. Chipili there. But it's also important that we are not perfect in our forecast. Information is imperfect. So we also want to tell people, yes, we can say inflation is going to come down now this year and next year. But we know there are other things which might impact inflation. We know right now Anna came in and there were floods, for example. That is going to have an impact on what we might have to spend to support people. And that ultimately will come into spending and impact the financial sector. Okay? We know, for example, crops might be affected. That might affect food inflation. So we try and take everything into account, but we just want to be able to give people that there are these risks which are there. They haven't happened yet, but they're there and you should be aware of them. And we thought that that information is important for people to understand and for us to share. So we don't, if you like, wait for data to act. You are actively using data to answer a question. Are you on the right track in achieving your inflation objective? If you are not, what are the things which are going to take you away from that track? And even if you think you are on the right track, are there things you know which might just pop up and blow you off track? Now, if you have a forward-looking framework, the idea is you don't just sit and wait for them to happen. You articulate them, investigate what extent might they actually materialize. And so that's really the approach we've taken. I don't know if that's clear.
That's very helpful, because I think the other thing I can just add to what DG has very eloquently expressed is that when we are providing this projection, we take time to highlight what the risks we see on that path. But having done so, you have to look at the nature of those risks. Some of those, they are not within our control, but there are other actors who can take action to make sure that they don't materialize. So, yes, we'll do what is in our purview, but it is our expectation that other key stakeholders who are affected or who can do something about those risks, do something so that they don't materialize. That's the whole purpose of this sharing that we do, why we take time here to come and give you that insight that this is what we are seeing. And if you are seeing something different, we are also open to you reaching to us and saying, but maybe you missed this, what can be done? That's the whole idea. We must work in a collaborative way, in a cooperative way, so that we can achieve the things that we want to achieve as a country. It's not anyone individual or any one institution that can tackle these issues that we are raising. But if we put our forces together, our heads together, we stand a very good chance to achieve what we want to achieve. And we hope that this framework gives you that insight. So don't, please, when you go back, just throw that and say, well, today we listened to the Bank of Zambia, we'll wait until May for another, and ignore what is happening. Then now, when you are coming here, that's and I said, oh, what did they say last time? That's not the intention. The intention of our interaction with yourselves is to get that information out to other key players so that we can act on those things that we need to act upon. Thank you.
Thank you very much, Governor. So on that note, let me take this opportunity to thank you all for accepting our invitation. A special gratitude to the production team and the ZNBC crew for your support. Until next time, thank you very much and do have a blessed day. May we be upstanding and allow the governor and his entourage to leave the auditorium.